Today, I want to talk about how now that Roaring Kitty has exercised its calls, the shorts are stuck with a base floor price, and the uncovered calls are about to spiral out of control. So stay tuned and let's make some money. Now I want to dive straight in with the key information. So, in my previous video, I went over the fact that Roaring Kitty has exercised or sold his calls and bought tons more GameStop shares. Roaring Kitty is now holding just a bit over 9 million shares, which Peruvian Bull has pointed out something interesting about. He said Roaring Kitty's shares are now exactly the same as Ryan Cohen's initial buy-in during August of 2020. So in August of 2020, we can see that Ryan Cohen bought 9 million shares, or 9,001,000 shares, the exact same number of shares that Roaring Kitty has just purchased. As he says, this purchase by Roaring Kitty was on purpose. RK is here to help reinvent the company. The fact that Roaring Kitty has now changed his trade from an incredibly short-dated trade with those short-dated call options to now a longer trade holding shares only shows that Roaring Kitty is in for the long run. Roaring Kitty wants to help reinvent GameStop, to reinvent the company, to grow the company to many times the size it currently is. Obviously, as I've gone through in previous videos, if GameStop and AMC grow as companies, the exact same thing will happen to them as what's happened to other companies like Tesla, Nvidia, and others. Many years ago, Tesla and Nvidia were beat down under a few dollars per share, almost to the point of bankruptcy, but turned around as companies and are now some of the largest companies in the entire world. And not only that, but their share price has gone from being beaten down over 90% to below just a few dollars per share, especially in Nvidia's case to well over $1,000 per share. This is exactly what Roaring Kitty wants to help with, and therefore this will be Roaring Kitty in the next corporate board meeting. With his purchase of over 9 million shares, that means Roaring Kitty now has to file forms with the SEC and could potentially be provided with a corporate board seat. He can join in with the corporate discussions on how to further GameStop and grow GameStop as a company. Now, Dave Lauer has tweeted specifying whether Roaring Kitty specifically exercised those calls or sold all of the calls to buy shares. So in the first tweet, he says good info from ES Invests. He's here to clarify that E-Trade does not include the premium in the cost basis. This confirms that Roaring Kitty sold all of his options or all of his calls and then purchased shares. There were no options exercised. But adds saying I'm seeing a lot of arguments over whether he sold or exercised or sold and bought, and I'm not really sure why it matters. He says Roaring Kitty has a new cost basis and he has the shares. There's no reason to think delivery of shares when exercising options is different from a settlement perspective. Basically saying whether Roaring Kitty exercised the calls for shares or sold the calls and bought shares, either way, he has tons and tons of shares that are now in his account. That means either way, the market makers have to locate and deliver these shares. Whether it's delivery from exercised calls or delivery from purchased shares, it's the same thing. They have the same number of days to locate and deliver shares through the books and records, whether he bought or exercised, so really it doesn't specifically matter. The important thing is that Roaring Kitty has increased his position and bought millions more shares, or specifically has increased his position and has come in to hold millions more shares, rather than selling all of his position, selling the shares. Obviously, if he sells every single share, there's no locating that needs to be done. But for every single share he purchases anew, that's one new locate. I also wanted to go through Friday's brilliant trade on KAVL, which ran for a whopping 72%. So in the pre-market, I told the group KAVL could be interesting over that $4.65 breakout. And then I alerted the group when the breakout was happening and when I was buying those shares. And you can see KAVL got that $4.65 breakout and continued running for a whopping 72% gain. So guys, if you want daily 72% plus trades, be sure to join the Millionaire Mindset Trading Group using the link in the description below, and also check out those testimonials. Now, Silver has tweeted explaining what's going to happen to all of these uncovered calls that the market makers have sold. So he said Keith Gill has bought 5 million shares and 12 million shares worth of short-dated calls, which is obviously now updated to over 9 million shares total. Adding saying Roaring Kitty then broadcasted his position only 3 weeks prior to option expiration, showing a level of conviction that would convince almost anyone something is happening, and to potentially buy in with him. Saying 1 week prior to expiration, he dumps the calls and buys the shares within a 2 trading day period. Removing those shares off of the market makes GameStop even less liquid during this period of negative rebate short lending. Roaring Kitty is effectively just locking up even more shares, making it even more difficult for the market makers to locate and deliver shares. And also it means there's even less shares in the float to trade during periods of heightened volatility. Seeing if these options reach a market maker who hadn't sold a naked call, the open interest remains high, because they've effectively brought this call and continue to hold it. But if they reach a market maker who wrote the call, the open interest drops, because the market maker then has the sold and the purchase transaction to fully close the transaction. Saying based on the data, only 1/3 of Roaring Kitty's options actually closed out and actually satisfied that sold and purchased call contract. The remaining institutional bag holders who purchased these call options from Roaring Kitty, not closing out of an earlier sale, now need the stock over $27 to break even. So now to hedge this loss of all of these call options these market makers are now holding, institutional traders will have to accept massive losses or reduce losses by passing the puck to someone else by purchasing another call. See where this is going. Saying market makers are going to be forced into buying calls to cover calls from other market makers. So to explain what's actually going on here, when Roaring Kitty bought these call options originally, there was a market maker that sold the call options to him. Now when Roaring Kitty sold those call options back, you'd imagine that market maker would buy his call options, closing out of their earlier trade. They sold the call, they bought the call, trade done. But actually, 2/3 of Roaring Kitty's calls were purchased by new hedge funds starting a trade, opening a call option by buying it from Roaring Kitty. And again, for these hedge funds holding 2/3 of these call options, they need the price to go up for their call options to make money. So either the price of GameStop goes up and these hedge funds make money, the price of GameStop goes down and they lose money, which seems unlikely, or they buy more calls to offset these earlier calls. And added saying this will effectively shoot the stock over $128 per share, putting every single option in the entire chain in the money. And that is a brilliant theory, so it will be very interesting to see what happens over the next few weeks, whether market makers buy more call options or push the price up to put their existing calls in the money. And this indicator shows us the wider market clearly sees some massive issues with the recent AMC and GameStop volatility for the health of the entire wider market. So this is the Fear and Greed Index, which shows the stock market hits its highest level of fear in more than a month. Currently, the market as a whole is in fear territory, which seems really weird as the S&P 500 is hitting new all-time highs. Usually as the market drops, the market becomes fearful, and then as the market rises to all-time highs, the market enters greed territory. But right now we're not in extreme greed, we're not even in regular greed or in neutral territory, the market is in fear territory. So clearly the market is fearful of what's to come over the next few weeks. And adding to that, the Bronx Viking also tweeted saying someone has added almost $1.4 million in GameStop's $32.50 calls expiring next Friday. Again, whether this is Roaring Kitty buying some more short-dated call options or just somebody else with a large bankroll is so far yet to be seen. But what is to be seen is in 1 minute, somebody purchased almost $1.4 million worth of GameStop calls, making a large bet. So it will be very interesting to see again over this week whether this large bet pays off for them. And finally, something that hasn't changed is short sellers still begging us to sell our shares. This screenshot says that a caller recently asked Jim Cramer what he thinks of AMC Entertainment. Jim Cramer replied saying, "I want you to sell and to take your capital out," which is obviously very interesting advice at a time when both AMC and GameStop are incredibly volatile, GameStop hitting new recent highs and AMC as well, and they could soon be hitting new all-time highs. Usually the trick is to buy low and sell high, not to buy high and follow Jim Cramer's advice selling low. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.